Good morning. My name is Yasha and I help young men invest in the stock market. Now, before we start today, please let me ask you one question. Do you want to see more videos like that where we analyze stocks and I teach you at the same time what is important when we analyze them? Or do you want to see more educational videos about stock market? For example, what is stock market, how to buy, how to sell, how to allocate money, how to find good stocks, and things like that, how to behave on the stock market. So let me know in the comment, bro, and I will for sure make videos that suit you the most, okay, and that are going to be helpful for you as well, okay. Now let's proceed with today's analysis. Today we are going to analyze Advanced Micro Devices Incorporated with the stock ticker AMD. Now, as always, we are going to analyze AMD using this little Canva presentation that I have right now here. So let's begin. First of all, why should you even listen to me? So my name is Yasha, as you know, and I help young men invest in the stock market. And when you have more trust for me, the first link in the description will take you to my one-to-one coaching. So feel free to check that when you are ready. Now let's proceed with the actual analysis. This is going to be very beginner friendly, simple, straightforward. You will learn a lot especially if you are a beginner. So grab a piece of paper, grab a pen, make some notes, because this is going to be extremely helpful for you, okay? Now, as a complete beginner, whenever you analyze stocks on the stock market, you should pay attention to the following 6 things, okay? You should pay attention to chart, profit, debt, money in the bank account, value, and price. Now here we have some quick facts about AMD. AMD is a semiconductor company. They basically produce processors for computers. They were founded in 1969, and you for sure know about this company because you play video games, okay? Now here is immediately the first thing that you should pay attention to whenever you analyze stocks. Whenever you analyze companies, you should think when they were established, okay? Because as a rule of thumb, the older the company is, the higher it has the chances that it will survive some unexpected event or some crisis, okay? Let me explain that a bit more. So, for example, this company was founded around, 70 years ago, let's say. So they have higher chances that they will survive the future stock market crash, for example, because they already survived dot-com bubble, they survived Black Friday, they survived 2008 stock market crash, and they survived coronavirus, okay? So they survived at least 4 major crises when the stock market crashed, and they are still here today, okay? So when you compare that to some startup that was founded maybe 2 years ago, they don't have that higher chance that they will survive another crash because so far they haven't experienced any stock market crash yet, So for them, we don't know if the management is good enough to handle the stressful situation like that. But with this company, it was founded let's actually calculate it. It was founded 50 years ago. So for them, we are more certain that the management will able to survive the crisis because they have done that in the past already. You know what I mean? So as a rule of thumb, whenever you analyze the stocks, pay attention to the year that they were established because the older it is, the better it is, okay? Now let's go to the chart, and for chart we have an instruction that tells us it has to grow for all 10 years. Now what exactly does that mean? That means that I will draw a little exponentially growing line, kinda like that. And we are going to compare the stock price chart, which is the orange line, with this black line that grows exponentially. And preferably they should follow each other because that means that we are investing in company that grows, that is profitable, that is expanding, because otherwise the stock price chart would not grow as that. You know what I mean? So let's take a look now how the chart is here. So as you can see, the price chart, which is the orange line, was following this black line quite well until 2022, and then probably that Ukrainian war happened, and that's why the profits, or at least the price, decreased massively. but then after that it suddenly increased again, and it's also growing in those last few months. So profit, I mean the chart generally follows that black line, which is a good thing. Okay, basically just compare the chart with this line that you draw, and if they follow each other or if they are similar, we are good to go. In that case, they follow each other, they are similar, so we are good to go. Now we come to the profit, and for profit we also have an instruction that it has to be in plus and it has to grow as well. Now here is the very same story. I will draw a little exponentially growing line, kind of like that, and we are going to compare the profit with this line, and preferably here as well, profit should grow exponentially. It should follow that line, because that means that the company is profitable and ready to invest into. Okay, now here immediately you can see a few red flags. Okay, you can see 2014, 2015, 2016 and 2017. All of those 4 years have losses. Okay, AMD had losses here, and whenever we have losses within the 10 years that we analyze, that's immediately a no-go for me, immediately. And because you should not invest in companies that had losses in the last 10 years, okay? Because this is completely bad for us investors. We want to invest in amazing companies that are profitable, that are growing, but that is not the case here, okay? Additionally, you can see that the profits have been decreasing since the last 3 years, which is of course another bad sign for us, okay? Not only had they losses, but they also experienced a decreased profit, okay? Which is obviously another no-go for us. We want to see companies grow and not make smaller losses. I mean smaller profits, you know what I mean? So profit immediately no-go, okay? Now we come to the debt, and instruction tells us that debt has to be low and preferably it should decrease through the years. Now that was an amazing example right now here. Look, debt has been decreasing since until like 2021, but then it increased massively, but it's still decreasing in comparison to the 2022, okay? So here they have an amazing example actually how debt has been decreasing, but then unfortunately it increased massively, which is a red flag for us, because obviously we don't want to see too much debt when we analyze companies. Because for example, just like with you, okay, if you have more and more debt, it's more and more stressful for you. You cannot sleep, you will start to panic, you will start to make irrational decisions, and you will just do maybe some crazy shit that you otherwise wouldn't do, okay? The same is with companies. The more debt they have, the worse it is for them, because the more profit they have to make to cover that debt, you know what I mean? And the more debt they have, then that circle just continues, you know? So generally debt is a bad thing, unless you have maybe some real estate companies, but that's not the case here, okay? So if AMD wouldn't increase the debt here in the last 2 years, then it would have been a perfect example of a company that has decreased debt and they would have a good goal. But here they unfortunately increased it, so that's a no-go for us again, okay? Now we come to the money, and with the money we literally measure money that they have on their bank account, okay? For example, you are a young man, you have probably 200, 300 euros in your bank account. Here is the exactly same thing, okay? We measure how much money do they have on their bank account, and preferably they should have more money than the costs. Now, how do we know that? You are a smart man, I always say that, use your brain. Look, they have plus $1 billion on their bank account, okay? Which obviously means that they have more money than the costs. Now, why is that important? That's important because whenever something unexpected might happen, they have more money to cover that, okay? For example, if one of their producing devices that they are producing, the chips, if it breaks, they have $1 billion to repair it, okay? Or for example, when their factory, I don't know, burns or gets flooded or whatever might happen, they have $1 billion to quickly cover that unexpected cost, you know? So the more money the companies have, the better it is, because they can cover something unexpected. Okay, for example, yeah, they can cover something unexpected, you know, like just like with you, if you have some unexpected medical bill, if you have money on your bank account, you can cover that comfortably. It's the same as here. Okay, so they have $1 billion. That's a good thing to go. Now we come to the value, and obviously we want to invest in stocks that are undervalued. Okay, now how do we measure valuation? By two things. First thing is called P/E ratio, and the second thing is called intrinsic value. Okay, now as a complete beginner you might not be familiar with those expressions, so just as a rule of thumb, P/E ratio should always be lower than 15, and intrinsic value should always be higher than the current stock price. You can find P/E ratio and intrinsic value of AMD on the internet. Just write AMD P/E ratio or AMD intrinsic value and you get the numbers. Okay, now what is P/E ratio? P/E ratio is actually a measurement that we use to measure how undervalued or overvalued is AMD in comparison to stock market and competitors. Okay, all of the stocks on the stock market have an average of P/E ratio of 15. Okay, that's why we have here 15, and we want to invest in stocks that are undervalued, okay, that have a value under of 15. Okay, because that shows us that they are undervalued. It's that simple. Okay, now P/E ratio of AMD was 232, which is way above 15. So based on that, we know that AMD is overvalued in terms of P/E ratio, and it's overvalued in comparison to other stocks on the stock market, okay, which is a bad sign for us. Now intrinsic value is another tool that we use to measure valuation, and it might sound a bit complicated, but it's actually very simple. Okay, so intrinsic value actually tells you what should be the stock price at this exact moment. So let me use that example. Okay, so based on some calculations, the stock price, that is a fair price, should be at this exact moment $157. Okay, but AMD is actually priced at $159, which is $2 above what it should have been. Okay, so based on that, the stock is actually a bit overvalued, but it's around that value, so it's still kinda okay. Okay, so basically intrinsic value tells you the price that AMD should have at this exact moment in order to be a fair price, but the price tells you then the actual price. You know what I mean? So this is what it should have, and this is what it has. It's that simple. Okay, now is the stock overvalued or undervalued? In my opinion, it's overvalued, because whenever we analyze stocks, we want to be as harsh as possible when we analyze them. Okay, so if we have one undervaluation and one overvaluation, that is still overvaluation for us. Okay, now we come to the stock price, and instruction tells us that price has to be lower than 150 euros. I'm from Europe, I use euros. You are from America, so you use dollars. Okay, now the stock price is just slightly above that. It's 159 at the moment of making this video, so it's slightly overpriced, which means that we will still not invest in it. Okay, maybe you can make an exception and invest in it if you want, but for me, whatever is above 150 euros is overpriced, and I don't want to invest in stocks that are overpriced. Okay, because when you are a young man, you have a tight budget, you have maybe $500. So if you buy several stocks that are cheaper, it's much better to do that rather than to buy one super expensive stock where you don't diversify your portfolio and you just have higher risk. Okay, now here is the same thing. My rule is that I will not go above 150, and here the stock is currently above 150, so that's a no-go for me. Okay, and now we come to the final evaluation, where we are just going to summarize everything that we found out about AMD so far. So does the chart grow exponentially? Yes, it does. If you don't believe me, go watch the whole video again, okay? It's that simple. Now, do they have profit? The profits are generally growing, but the thing is that in the first 4 years that we analyzed, which was from 2014 to I think 18 or something, they had a loss, which makes us immediately a no-go, okay? That's bad, we don't want to see that. Does the debt decrease? Yes or no? No, it doesn't. It actually grew in the last 2 years, which is a bad sign for us. Do they have money on the bank account? Yes, they have $1 billion, which is a good thing. Is the AMD undervalued or overvalued? It's overvalued because both P/E ratio and intrinsic value are higher than they should have been, okay? And the price is above $150, so the stock is also overpriced for us, okay? Now, should you buy or sell? In my opinion, you should sell because simply they had a loss, okay? Net profit in 2014 up to, I don't know when it was, I think 18, was in minus. 2017 was in minus. So whenever we see a loss, that's a no-go, okay? Overall, the stock is also overvalued because P/E ratio is way higher than it should have been, and that's about it. Like, debt has been increased in the last few years, unfortunately, but overall, bro, now whenever you see loss, that's immediately a sell in my opinion, so I personally would not buy it, okay? Now, if you want to know more about stock market investing, click the first link in the description. When you have more trust for me, do the hard work, and see you on top of the world.